And good afternoon, everyone. Crazy day today. Very short overview of the market and what's happening. Nothing too long, but it's not looking good. Previously, if you were watching, was looking at the long-term SPY today, and we had some predictions that we can possibly go on. I did a little video on this for the future content, but we had a path we were going on that the bottom of uh this wedge, not wedge, no, not wedge. The bottom of this path is basically hit multiple times. In fact, I can make it even stronger if I just kind of tuck it up a little bit. Right there, we see a confirmation on the body here. We see close confirmation here, and we see more body confirmation. Regardless, I still think this is ideal. Right around here. Anyway, we're back in it. This is a long-term negative path. We've been going on it since December 21st, January, beginning of this year, good old 2022. And it drew a path down. We had a bit of a bounce up recovery. We had a couple of attempts. We had an early recovery back in March. It could not leave the wedge successfully. It kind of created a new wedge, a long-term wedge that really is a very, very, very long-term wedge. I would actually argue this wedge, based on how it exists over the time of all of these, I'm gonna call this the money printer go brr. Right? This is what happened when all the money started getting printed and was getting market. It was it was literally basically flooded into equities. It looks like, honestly, I feel like 100%. As stupid as it sounds, there are major institutions that are using margin and playing some really risky games on the equities. And I believe it started way back here, back maybe even further, really, but really around the 2008, right? So that was kind of a new point. Anyway, there's a lot of detail on this chart and a lot of history to go back into, so I'm not going to go there. But I will go into the possible predictions, possible situations. If the money printer continues to go burr, hey, we have a green market. We also have green inflation. Congratulations. Money go burr and money don't go burr. Time. The red possibility is a margin flood. Now, I've been thinking about this possible money printer go burr and all the extra low interest that we've had for the longest time. With such a low, near zero interest rate, you're going to have a lot of people getting on margin and using money they don't own. And I believe that's what also has been pushing us up a good amount, not as much as the inflation, but we need a, I would say, we need another 30% drop in order to get some margin out of the way, bankruptcies get out of the way. And a lot of the mainstream media people are going to say to get rid of zombie companies. Well, there you go. That's your zombie company. Or possibly big institutions that are playing with some very risky margin call. And finally, but not least, if at any point in time CPI PPI becomes greater than 12%, I mean, less than 2-3 months is a particular situation, but generally, if the CPI reaches above 12% and we get comfortable in the double digits, I think we just are approaching, I think, no, United Kingdom's approaching 9.8, expected 9.3. And I believe the US is 8.9, 8.8, expected 8.6. So if at any point in time we reach above 10, let alone above 12, we're going to be seeing some heavy lift. If we reach above 12, well, we're not going back down for a bit. If we get to 10 or 11, we may have a chance to go back down as a type of spike, one of those spikes in a chart that go back down eventually. So potentially, yeah, that's another case that I'm thinking of. The only good situation is still not a good one. It's another printer, money printer session. But in the end, it is important to realize we have been inflated for a long time. Margin, credit, money that doesn't exist, money that's owed, money that's being passed around and betted on. 2008 isn't over. CDAs, it just became some more complex system of equities and shorting and God knows what. So the technique has changed, but the concept of greed has not, and we need to get back down to this range. Between this green, this yellow, this is a safe bet. In fact, we reached it back in 2020. We could have stayed around here, kind of set a bit, but had to print money and make that go. So, yeah, not good. In fact, the money printer went really crazy burr right after 2020. But look at how quickly, like the actual, let me show you something. Show you something. Where is it? Where is it? Where is the velocity? No, M2I. Keep changing the dang ticker name. M2V. No, it's the velocity. Right, there it is. So look at 2020. 2020. Look at how quickly after February 2020 printer go. What the fuck? Yeah, that's bad. But not to mention, we've been basically going over the printing process since, again, well, 60s. The slope increased in 93. Another slope increased around 2008. So this slope increase each time has been consistent. And now I think this is just the money shot, guys. This is the money shot. This is the money stock shot. And this is where it all just kind of goes back down, takes a nap. So if that's the situation, that's great. No, we want it to go down. We want the money printer to stop. But it is going to cause a bit of chaos in the market. What's going on today? The market's not like we're going to essentially drop down below this long-term bearish trend. Now we're inside here. So now we're inside here. We haven't closed yet, so, but I do have the prediction starting around this space, so maybe we bounce off of this. I honestly don't think we're gonna bounce if we haven't shown it yet. In fact, the volume is low, it's a red day, maybe. We are at some pretty important low values. Here's a low. Noon. Bam. So we definitely have some crazy low values that we're fighting right now. If we break down below this, we're going down for sure. But we can get caught either in this section, or in this section. Ignoring these green, but you don't have to. So we have one section, two section, three section. So like kind of like middle. Yeah, basically bad, okay, sweet, but under what consequence? All right, that's it.